everybody. Welcome to our weekly webinar. And as the noonday gun sounds in our Cape Town studio, we're thrilled to kick off another insightful webinar session. I'm Neil Peterson. I'm the founder and content-in-chief of Real Estate Investor, South Africa's premier independent real estate content and education platform since 2007. And at REI, we're deeply passionate about serving the South African real estate investor, the South African real estate and business community through our digital platform, rei.co.za, our monthly digital magazine, Real Estate Investor, and REI's regular virtual webinars and in-person events. And today I have the pleasure of serving as your host and moderator for our investment webinar today, and we're really thrilled to have you join us for this insightful session. And today's topic is exploring the Western Cape semigration boom as we navigate all those big moves. So before we delve into our discussion, I extend a warm invitation to all our esteemed attendees to actively engage with us during this webinar. Your participation enriches our dialogue, so please feel free to ask any questions you may have for our panel, who I'll introduce to you shortly. Please utilize the designated Q&A box located on the bottom right-hand side of your screen. Remember, not the chat box, which is reserved for general comments. Rest assured, all your questions will be addressed both during the Q&A panel discussion in our final session. So recording of today's webinars will be accessible. We get that question regularly post-event via email if you've registered for this event. They're also available and accessible on the rei.co.za website under events on the homepage. So let's move on to the heart of today's investment webinar, Semigration. So we all know that everybody's moving to the Western Cape at a rapid rate, and we don't know how much, and we hope to unpack that all today. So Semigration is a key driver of both sales and rental activity, and it's seeing households flock into the Western Cape in search of superior governance, enhanced lifestyles, promising opportunities, and as buyers explore the market, they discover enticing value for money properties, particularly in sought-after estates, gated communities, and also lifestyle communities, amongst others, but also in the entry-level affordable markets as well. So the demand for rental property is also surged, and it's spurred by a very limited rental stock, which in turn also fuels growth in select instances. And investors are also eyeing a number of apartments, Airbnbs, popular, lucrative buy-to-let ventures, also buoyed by the region's low risk of tenant defaults, which tend to be some of the trends. And these are just some of the things that we're going to explore and uncover today. So we look for your participation. So let me introduce you to our esteemed guest panelists today. First up is Brad Bendel. He's the current designate CEO for Betterbond, and Brad has a strong background in sales and leadership roles and has been the head of sales since June 2002 of Betterbond. So Brad, great having you here today. Do you want to introduce yourself to the audience?
Good afternoon, Neil. Good afternoon, everyone. Thank you very much for having me on the show, Neil, on the webinar. I think you did a great introduction. Thanks very much. Didn't leave much to the imagination, but yes, I have been in the industry for just over 20 years. I was previously with Uber bond originators, Uber home loans, and then in real estate for a short stint, and then back into bond origination. And my core focus has really been building and running big sales teams, both in origination and real estate. So that's been my focus over the 20 odd years.
Awesome. It's great having you here today, Brad. So
thank you.
Forward to your input to the webinar. So next up is Nick Morgan. He's the founder and MD of Opportunity Private Capital. His consistent aim is to add value by providing investors with alternate investment property options for the highest returns possible while prioritizing protection of capital. So Nick, great having you here again. I think you were participating in our last immigration discussion. Do you want to introduce yourself to the audience, please?
Neil, morning. Thanks again for having me. It's always a pleasure to be here. As you said, Nick Morgan, one of the co-founders of Opportunity Private Capital. Look, we operate in a funding space in the residential development sector, which we've been doing for 18 years. I'm also co-founder and director of a number of other companies within the property sector. So it's a general, I've got a general level of experience over the last 20 years across development, sales, investments, and construction.
Awesome. Great having you again here, Nick. Wonderful having you. And last but not least, we have Jonathan Kohler. He's the CEO and founder of Landsound Property Group. Jonathan, great having you here today. Do you also want to introduce yourself to the audience, please?
Excellent, Neil. Thanks very much. Yeah, thanks for having me. I've been involved. I started Lansdowne 18 years ago, started the business in 2006. And we're a property services company. So we started it sort of as an estate agency, more in the investment property space, finding people investment properties, placing tenants, managing it on their behalf. And subsequently to that, we've started a managing agent business, so we manage around 45,000 residential properties nationally. We've got an estate management business, and then all the, the different services in real estate. We've got an insurance business. We do building insurance and sell short-term insurance into our homes. We've got a financial services business. We lend estates money for area levies and special projects. We've got a solar business, so we sort of install solar into all of our buildings. We've got a utilities management business, so we've got smart electrical, water and gas meter services. So basically, we've got an off-plan sales and marketing business as well. So all of the different property services, sort of based on the back of property management that we've sort of opened over the years. So yeah, we've got a lot of experience in the property services space.
Wonderful. So great having you here today, Jonathan, and we obviously look forward to your input to the Q&A and the panel discussions. So last time around, we actually had a guest from Lightstone who kind of set the scene for us and all that kind of thing. And I know we're going to unpack that. And we thought, but this time we'll do it slightly different because we got people that are here that are playing in the market themselves. And firsthand, they are seeing things, what is happening from the Semigration. And sometimes it's great to get a combination of both. The stats are important, but certainly, we like to know exactly on the ground what's going down. So Brad, let's start off with you. Maybe just to kick off the discussion, what are the trends that you are seeing in Semigration? I mean, which are the areas in the Western Cape are popular and why? But what are you seeing from your viewpoint, certainly from, you in the finance business and people are doing applications, you can see where the interest is.
Thanks, Neil. I think, the truth of the matter is the whole of the Western Cape is popular for most who are not living in the Western Cape for quite obvious reasons. Most things in the Western Cape work, and therefore it's very attractive to our counterparts from the north. And so we are seeing a big number of people semigrating. The popular areas in the Western Cape, primarily in the southern suburbs, although the stock is limited, but it's affordable. I think yesterday, let me just precede this by saying, yesterday we were talking, yourself and Nick and myself, about the pricing. And the reality is that the Western Cape, in our opinion, is once again, and the prices are unhinging from the rest of the country. And so that's making it certainly more difficult to semigrate, for semigration to take place, just simply from an affordability perspective. And if you are not able to offload your property in Gauteng, for example, then it's very difficult to purchase in the Western Cape. So the southern suburbs, although there's very little stock, it's an affordable, relatively affordable area, and similarly priced to maybe a high net worth area in Gauteng. Then obviously northern suburbs, Western Seaboard, and then the Somerset West, Stellenbosch areas, where there's big developments going on. Jonathan was talking about Devonbosch just a little while ago. There's some big construction and big developments happening there, which are attractive to someone who's looking to semigrate. So, albeit that, or the perception being that everyone is moving to the Western Cape, I don't think that that's the case. It really is a case of affordability, whether you can afford to move down here or not, and then afford to commute. Because you're going to commute again, so one has to take that into consideration. And yeah, I think younger families are looking at gated estates, Val de Vie type scenario, and even Val de Vie in itself has become relatively expensive for the average home buyer. And then one considers that first-time home buyers are now around about 36 years old. So that gives you an idea of the type of person who would then consider semigration. And obviously, semigration is only possible if the company you work for or the business that you run is able to decentralize, so to speak, or allow you to operate on that basis.
Okay, great. I think it's a nice little introduction into where it is from your perspective. And, Nick, I think we've had lots of discussions, and I mean, you've done also a lot of studies. You've really tried to unpack the sort of semigration from your perspective. And I mean, you're a property developer, you're also raising finance and that. What are you seeing? What is happening in your world, and in terms of confidence in the Western Cape from a semigration perspective?
So Neil, we know there's a lot of anecdotal evidence because everyone talks about semigration. Everyone has someone on their street who might have moved on from Gauteng. But I think the easiest way to display this is through a couple of basic metrics. And I think that the only way that I can illustrate from our perspective what's happening in the market is to do that. So I'm going to tackle three components, one being sales on the development side on the various projects, one being the leads that are generated for those sales, and then I'm going to go into the investment side as well. So it might give an indication of trend. I mean, it's not a sample size that Betterbond might have, but it is indicative of trends. So from a sales point of view, let's go back 5 years. So in that period, 2019 to 2022, across the various projects, people buying who lived in the Western Cape and buying in our projects was nudging 80%. So it was just over 79%. And from other areas was 21%. Fast forward to 2023-24, there's been around about a 10% swing in another direction. So we've now got Western Cape is now just over 70%, and the other areas are nudging 30%. So there's definitely a trend towards people from other parts of the country looking to either invest here or owner-occupy here. And I must say that quite a lot of them are investing in properties here and still living in KZN or Gauteng. Then an interesting stat, which actually surprised me somewhat, was the leads that we've had this year across the projects coming in for the sales side. And 42% of the leads are from other parts, are from outside the Western Cape. And that's quite a huge upswing from prior years. So there's definitely appetite, whether they can afford to or not, as Brad alluded to. It's a bit prohibitive in terms of the cost to a lot of people, but there's certainly an appetite there that seems to be growing. So just on those leads, 58% from the Western Cape, 42% now from other areas of the country, predominantly Gauteng, I might add. Then if we move on to the investment side, so if we look at, and this is on the funding of projects, and we look at private investors who are coming into these projects, if we look back at a 10-year time frame, the first 5 years of that time frame, investors from the Western Cape made up 73% of the investments, whereas the Gauteng and other areas of the country, 27%. The second 5 years, so the last 5 years, in other words, it's changed. Western Cape's now 49%, and it's been superseded by other parts of the country that are now 51%. Now, obviously, a lot of it's nuanced. It's not a simple case of semigration, but the point being is there's a growing desire for people either to move to the Cape or invest in the Cape where they deem it to be probably a safer economy.
Okay, great. I think a nice way to set the scene there, Nick. And, you know, Jonathan, we were talking, I mean, just if we look, you know, this is such a huge confidence backing for the Western Cape. I mean, we got an election coming up next Wednesday, in fact. It's a week time, and it's in a week. I mean, surely the ANC should look back and say, well, listen, you know, it's related to services. There's something that is just not happening here. I mean, the people are voting with their feet here. So, Jonathan, you actually run a big operation, a big property operation nationally, operating from Johannesburg. And you've got some very interesting stats in your business and what you're observing. Come share that with the audience, because I think it's so important.
Thanks, Neil. Yeah, I mean, the fortunate position that we're in is that we represent national developers. I mean, we're a national business. We've got offices in Johannesburg, in KZN, and also in Cape Town. You know, but we're in the fortunate position where, you know, if we're representing national developers, we can tell you, you know, the different yields for the exact same square meterage. For example, like a one-bedroom investment property. If you're buying a 50 square meter one-bedroom in Ballito versus Umhlanga versus Johannesburg versus Pretoria versus Cape Town, you know. And traditionally we found, yeah, I mean, traditionally the sort of the rental yields in Johannesburg have always been sort of, the rental yields have been far greater in Johannesburg. The demand has been far greater, you know, because it's, you know, in the sort of greater Gauteng area, if you've got 10 million people, you know, you can place tenants, etc., etc. You know, the yields are good. You know, so buying investment properties traditionally in Johannesburg was the way to go, you know. But if there's no capital appreciation on your properties, then even if your rental yield is good, it's not really a good investment, you know. And having a look at the Johannesburg market, let's say over the past 15 years, there's been no capital appreciation in Johannesburg over the last 15 years. I mean, literally, if you bought from a developer 10 years ago and you put it back on the market now, there's almost an oversupply in Johannesburg. You know, the large developers keep on releasing more and more stock, you know, and you're not getting the capital appreciation there. And there was, you know, there was almost, you know, from Joburg, there was almost a bit of semigration for lifestyle and some good capital appreciation into KZN as well. You know, you could go to KZN, you got sort of good rental yields, and, you know, in that Ballito Umhlanga area, you know, the capital appreciation was good there as well. But what we're finding now is, in my opinion, the Western Cape is sort of the only place in the country now, you know, where you're getting good capital appreciation and your rental yields are actually higher now, you know. So, I mean, it's really, you know, if a person is looking to spend 6 million rand on a home now and they're looking to purchase in Gauteng, you know, the guys are thinking there's no capital appreciation in the market. Rental yields are quite low. They're also having a look at the rand dollar and thinking, well, you know, even if there is capital appreciation, you know, if the US dollar is sort of, if the rand's depreciating against the US dollar sort of traditionally over the past 30 years, probably by about 8% a year, really the only place to invest at the moment is Cape Town. People are moving down there, you know, which drives rental yields up. And yeah, you know, the capital appreciation has also been driven, you know, by people semigrating there. You know, there's also international buyers there too, you know. So, I mean, we really are finding that if you're looking for capital appreciation in the property market, and specifically in the investment property market, for me, Cape Town is sort of the place to invest. And you've seen that sort of nationally, you know, having a look at, yeah, I mean, having a look at the financial results of Buoyed, for example, you know, a national developer building similar products in Gauteng. You know, we manage the majority of Buoyed's properties nationally. And properties in Johannesburg and Pretoria, as well as Ballito and Umhlanga, you know, the sales have slowed substantially due to interest rates being high, lack of infrastructure lack of demand, etc., etc. And in the Western Cape, their sales are still good and they've got capital appreciation, So, I mean, it's interesting to see sort of their, and all developers are feeling, the similar pinch, but sort of going from, 3 billion odd in revenue, and that's sort of halving, So usually if they'd sell 300 units a month, they're selling 150 a month. And it has a lot to do with the interest rates being high, sentiment being low, but in the Western Cape, they're still doing well. And that's being driven by people, not only from Gauteng moving to the Western Cape, but people who move from Gauteng to KZN and now move from KZN to the Western Cape. KZN have been hit with, sort of a lot of unfortunate things, floods, riots, lack of infrastructure, all of those types of things, so that's all driving the Western Cape semigration trends.
Okay, great. I think a nice scene to set there, Jonathan, as well. And I mean, I think the Baldwin story, the big national listed property developer, their income has literally plunged 15%, but they said the Western Cape has overtaken Gauteng as their biggest market. So that's significant. That's huge. I mean, and yes, we've all mentioned it's not easy out there, and but certainly there is confidence in the Western Cape. So coming back to you again, Brad, I think, we talk about the Western Cape, but the Western Cape is bigger than Cape Town. I mean, there's other areas that are performing well. And I mean, you getting the bond applications we're seeing in other areas. Do you want to maybe just talk about those other areas? And look, you're looking at the people that's doing application for finance, but we know that also the rental markets, because not everybody is in a position, as I think it was mentioned by yourself or Jonathan earlier, where they're not in a position to buy immediately. And so maybe just tell us about those other markets of the outside of where the Western Cape borders, and obviously what are they doing? Are they buying, they're renting? What's actually happening?
Neil, so I think again we had a chat about this yesterday, and talking about specific, this narrative that everybody sort of talks about, everybody moving to Cape Town, and the Western Cape is vast, and it expands right up to George, Mossel Bay, and those areas are expanding at a rapid rate. The semigration down to George and Mossel Bay is unprecedented, and in fact, I think the demand, the developers are battling to keep up with the demand at the moment. So we're seeing those markets becoming quite buoyant, and then again, like Worcester, for example, who would think that people would be moving to Worcester, but they are, and that's that's over the Helderberg into it's quite a way out of Cape Town for one, to be honest. And then again, the Somerset West, and I mentioned it earlier, the Somerset West area, I think it's the fastest growing area in South Africa. And it continues. And Jonathan, I'm sure you heavily invested there. Baldwin is very, very strong in that area, but then so are the other big developers in South Africa. And then interestingly, you've got these micro apartments being put up at an unprecedented rate, developed at an unprecedented rate in Sea Point. And I remember seeing the first micro apartment block go up, and I thought, a couple of my colleagues and I said, well, how many of these can go up in Sea Point? Well, it seems to be that's a never-ending situation. They're going up, and those micro apartments are 24 odd square meters at 1.8 million, 2 million plus. So it goes to Jonathan's point about capital growth and your rental yield in the area. So I think that and I said it previously, there are areas that are similar to that of Gauteng and maybe even KZN, to Jonathan's point, where you're seeing people semigrate from KZN now, who were previously in Gauteng. Areas like the southern suburbs, you're quite limited in terms of stock in those areas. There's not a lot of development going up there. but when you push outside the sort of outskirts of Cape Town, and specifically, you know, your outlying areas like Worcester, George, Mossel Bay, there's some very, very interesting stuff going on there, and I think we'll see those areas expand quite rapidly over the next while.
Okay, thanks. I think that's really sort of taking it to the next level. The micro, I think you've opened up sort of micro apartments, because I think what's happening in that sector, and that's for another discussion a little bit later, is the growth of Airbnbs, which is monstrous in the Western Cape. So that's a separate discussion, and we won't go into that right now, because there's very few people that I think that want to be cooped up for 30 days in a very micro, 24 square meter apartment. But there's certainly people that will overnight there. Okay, so just moving on, but I think it's a very important point that you've raised there, because there's all these different sectors, there's all these different trends which are happening in all these different areas. I mean, growth, Mossel Bay, as you mentioned, massive growth. Somerset West, where Bowen is, and huge. What are you saying, Nick? Because Nick, you took a strategic decision to focus on the Western Cape quite a few years back. Do you want to maybe just unpack that and what you're seeing from the Western Cape perspective?
Yeah, so a couple of things. Yes, we did. Sort of about 10 years ago, we took a decision to focus solely on the Western Cape. We'd been busy with projects in other parts of the country, and we just felt that at that stage, even, that we saw some of the degradation of municipalities and other areas. So we just made a decision to come down to the Cape, and that's treated us pretty well so far. I just want to pick up on a couple of points. One by Jonathan about the rental yields in Joburg. So he's 100% right in terms of the Joburg rental yields are always better than Cape Town. However, and I don't have the metrics for this, so Jonathan would be better, but I think that is turning a bit. A couple of years ago, you'd get a net rental yield in Cape Town of 6% in a lot of areas. That's now pushing up to 8%. And on the ground, we're seeing literally across a range of projects, 2-bedroom apartments, where the rental is in 2 years has gone from 9,000 a month to 12 to 12,500 a month. That's a massive jump, and that's impacting yield. So to Jonathan's point, the yields in Cape Town are getting better, and there's capital growth. And then I just want to tack onto what Brad was saying is, Brad is reasonably reticent about flying the Semigration flag too high, quite rightly, I think, because there's not an avalanche of people coming. It's a systematic process. I think Brad is quite right to just tone that down a bit. But I think we need to focus on the reasons why people are semigrating. Why are they coming to the Cape? And there are some things that potentially are worth talking about. In terms of the GDP of the Cape, there's a slow divergence between the GDP of the Cape and the national GDP at the moment. In 2022, for example, national GDP growth 1.9%, Cape 2.6%. Last year, slightly higher in the Cape. The projections are that the Cape is going to go over 2% again in 2024, while the national GDP languishes a bit in the mid 1.5% or about 1.5%. So that is one reason why I think that's showing that people are coming to Cape, because there's perception, infrastructure is better. Then, Neil, we were lucky enough to go to the Western Cape Developers Conference a couple of weeks ago. Mm-hmm. And I'd just like to share a couple of the thoughts I picked up, some of the comments that I picked up there from some of the speakers, which talk to infrastructure. And we've always said that infrastructure is the lifeblood of a developing area, whether it's a town or city or whatever the case is. Infrastructure stability and growth is fundamental. And in the Cape, I mean, it looks like these guys have got their heads switched on, because they're putting 7 billion aside for energy spend. So their predictions are that by 2027 they'll have reduced reliance from Eskom by 1,800 megawatts, and by 2035, that's another 10 years, I guess, 5,700 megawatts. I mean, that's massive. So they have a plan, which is pretty cool to see. 3 new hospitals being built. That's local government hospitals, not private. 2.5 million put aside, 2.5 billion, sorry, put aside for new schools and rapid build schools. So all that is going to further influence the GDP in the Cape, which is going to again influence people coming down to the Cape. So I think Semigration, if the Western Cape government continue its trend, then we'll just see a general track of people coming to the Cape just because it offers more opportunity, I would guess.
Great. I think, thank you for bringing forward that point specifically on the Western Cape Property Development Forum, because I think what's quite interesting, just to add to that, Nick, is that we saw all the mayors of all the Western Cape municipalities present. But more specifically, they set themselves very specific benchmarks, very specific goals, and they said, measure us against the number of properties that and developments that we are approving, and measure us against that. And this, to me, is just testimony to the fact that why the Western Cape is just working. That these guys are saying they're putting themselves out there. I mean, we're talking about these guys, heading up, their municipalities, they're functional, and they're telling you what they're doing, and they're asking you to engage with them. And I think that's a critical point. And so I think, thank you for raising that. But you also raised some very important points there on construction. So Jonathan, once again, yes, you set up in Johannesburg, you've seen all these different things. And I think, last time around, Nick, you'd remember, we said it's also important that Johannesburg and those metros also improve, because we know that in the Western Cape, how sustainable is it? We can only take so many people. There's only so many GP number plates and KZN number plate with ends on, so I think, we get to a point and we see that there's also overcrowding. So Jonathan, just unpack. You on both sides of rent, you also on buy. Maybe you can also expand on what Brad has said, what Nick has said, but also a little bit more detail on the dynamics of sales versus rental market in Semigration.
Yeah, sure, Neil. So it's the rent or own option is always, like a question that traditionally, as a property guy, I've always owned my properties. If I live in a property, I own it. And then, there's capital appreciation. And in a couple of years' time, you've paid down a bit of your bond and you've got some equity there. But that's based on capital appreciation. And I think it depends on what level in the market you at. So if you're in that sort of first-time homeowner, you're buying a little one-bedroom apartment from a large developer like a Boasting, for example, I think that, the bond repayment and your rental are quite similar. I think that your rental will probably be slightly lower than your bond repayment, but then you've obviously got the little, the additional costs like your levy and your rates and taxes. And there, I'd say most of the time, it makes more sense to buy if you can afford to buy. And also it makes more sense to buy if there's capital appreciation in the market. But for example, the property that I live in Johannesburg, I rent it. And I'm a property guy. It's almost like a swear word. Guys are like, I can't believe, I said, listen, if there hasn't been capital appreciation in the market for 10 years in Joburg, the levy payments keep getting higher and higher, the rates and taxes keep getting higher and higher. Why would I purchase my property, especially with 8% depreciation against the US dollar? So I can just go and take my money and put it in sort of a offshore equity type of play, and I'll make the 8% capital appreciation per year. So I think that's really the question. So would I buy in the Western Cape? Yes, I would buy in the Western Cape, because I think there's capital appreciation. But, rent or own, yeah, I mean, it's definitely, I'm just having a look at some stats here. I just pulled them up when we were talking about them, comparing the same developer nationally. I mean, in Gauteng, you're sort of looking at these yields are actually quite good. This is based on a Boasting property model. If you're looking at sort of a 45 square meter, 1 bedroom, 1 bathroom, purchase price 680,000 in Gauteng. The net rental yield 10.27% per year. So it's an unbelievable rental yield. That's not taking into account any agent's commission. That's just taking your rental, minusing your levy and your rates and taxes, dividing it by the purchase price. You're getting sort of a 10.27% yield. Take that to the Western Cape. The purchase price is a lot more. So now it's jumped from 680,000 to 910,000. So you're paying substantially more for the same thing in the Western Cape, but your rental yields here are higher, 10.48%. Plus you estimating some capital appreciation. So let's say you call it 8% per annum. You obviously only get the capital appreciation when you sell the property, but that's a very, very good rental yield. You look at the same property again in KwaZulu-Natal, in Belito. Now the purchase price, very expensive, 1.3 million and your net rental yield 6.56%. So that sort of shows, the difference between sort of a Gauteng rental yields are still good. Not all Gauteng yields are as high as that. Those are high sort of yields, but I'm a very big advocate on sort of a 1-bedroom, 1-bathroom. People always saying, should I buy a 2-bedroom, 2-bathroom? For me, traditionally, 1-bedroom, 1-bathroom, your rental yield compared to your capital outlay, it's got the greatest rental return, but it's all based on capital appreciation. If there's no capital appreciation in the market, for me, no matter what level you look at, it's better to rent and take the additional revenue and invest it in other things. But if there's capital appreciation, then I would definitely rather own the property. And it also depends on the level that you're entering. If you're buying sort of a buy-to-let apartment, I would rather purchase, but if you're buying a super expensive property, if you're buying a home in Constantia for 20 million rand, I'd still prefer to rent, because you could probably rent it for 80,000 rand a month. And even with the capital appreciation, if you're taking the extra 120 and you're investing it in offshore equities and getting an 8% yield and then an 8% depreciation against the US dollar, you're still making 16% on that money, and that's offset against the rental that you're spending. So I think it depends what level you at, but I've rented both. I'll give you an example. Our office in Gauteng, I purchased the office 10 years ago. I bought it off plan from a developer. I sold it 10 years later. It was completely paid off cash. So, I've got this fancy asset. I sold it for the same price that I bought it for 10 years later. Now I rent my office and I rent the home that I live in Gauteng. But I've got an investment property in Cape Town that I Airbnb in the City Bowl, and it's giving me really, really attractive yields. So, I guess it's just really what sort of level you're going in at, and are the bond repayments close to the rental yield? So a little bit of a forced saving of paying your levy, paying your rates and taxes, and then you've got an appreciating asset. So I think it depends on what sort of price point you're going in at, and is there capital appreciation in the market? I think those are really the two things you have to look at.
No, absolutely. I think, Jonathan, you're actually opening up a whole different can of worms over here, because you're talking the investor talk and all that kind of stuff, which is great. Absolutely love it. And because a lot of people are just sort of semigrating just to move from one home to the next. Not because there's one about semigrating your capital from one to the other, which I've been doing since the early 2000s in Johannesburg, and I divested also from Johannesburg since the early 2012s and stuck on the Western Cape. So for different reasons, and I was getting great returns over there. But before we move on to Brad, I just want to reach out to the audience here. Please fire away with your questions. I know we've got a whole bunch of questions in the Q&A box. There will be a recording. A lot of people have asked that. I always mention it. We get this question very often. Will there be a recording? Will there be? Yes, there will be a recording. And and also your questions, please submit them in the Q&A box. We got a little session at the end. Brad, you actually started off, with the whole sort of micro apartments and that kind of stuff. Look, you're in the finance business, so you obviously do get some investor applications. And there's, and I mentioned and alluded to the Airbnb markets, but and which is, Cape Town has become a significant market. There's also a lot of people who are buying the 20 million property that Jonathan was talking about in Constantia, but then they're subdividing it into Airbnbs. And it seems to be getting broader there, where people are looking at other areas, even like the Somerset Wests and even like in some of the northern suburbs and that kind of thing. So there's two sides of it. The one is somebody that's investing to buy a home, to semigrate, to start renting and then to buy. And then there's somebody who's semigrating their funds. So maybe just talk a little bit about what are you seeing different from a finance application perspective. You know, you mentioned the micro apartments, but you operate more in the affordable markets. And I think we could have another webinar on the opportunities in the Western Cape affordable markets where you can get incredible yields. And I know Nick will also like to share some of his yields too that he's offering as well, which is north of 10%. So so maybe just tell us a little bit about from what you're seeing from a finance application perspective there, Brad.
Yeah, so I'll give you sort of three scenarios, Neil. The sort of high net worth market, the sort of middle of the markets, and I'll give you a definition of those. So anything north of 8 million is in the Western Cape, generally high net worth. That's how we define it. Anything between 3.5 and 8 is sort of your middle market, and then anything below that is your sort of now entry level. I know there's you know, one could define it even further, but just to give you an idea, I mean, you know, I was interested to hear Jonathan talking about, you know, his theory on buying or renting. But just to give you I mean, my wife is a real estate agent on the Atlantic seaboard, specifically Waterfront and Morley Point. And just to give you an idea of how how things have changed in the waterfront specifically. I mean, 2 years ago, the only buyers that were really looking in the waterfront was generally foreigners wanting to invest at a super high net worth environment. And now 100% of the leads are Joburg people, Joburg buyers. In the waterfront, the average rate per square meter has moved on I don't know if you know the waterfront at all, but there's yacht basin front facing, and then there's the canal facing. And the canal facing units have shot from 78 Rand a square meter to 92 Rand a square meter, at 92,000 Rand a square meter, not 92,000 Rand a square meter in the last 12 months. The front-facing, yacht basin-facing units have shot from 104 to 130,000 Rand a square meter. So there's capital growth, Jonathan. But it does give you some sense of the urgency that is being, I think, is creeping into the market. I think the people who are wanting to semigrate in the high net worth sector of the market are starting to be quite urgent. And it goes to my original point about the prices in the Western Cape unhinging from the rest of the country again. And I think that is really, really happening. And just, you know, some stats on high net worth: 70% of all leads coming into the Atlantic seaboard now in the high net worth sector are Joburg based. So, you know, that's a massive number. That means, you know, there's a massive demand in that sector. In the middle sector, 62% of all leads in the middle sector, so that's your 3.5 to 8 million, are all Joburg based, and that's a big number as well if you consider that. And that will extend into the southern suburbs, even into northern suburbs, you know, Valdevies, etc. And then in terms of investors, 78% of those micro apartment buildings are being sold to investors. So to your point, that's probably buoying supporting the B&B market, and people wanting to rent. And you know, the rental yields on those apartments are fairly good. So and I think whether it's yet to be seen, I think I'll leave this to Nick and Jonathan, whether we'll see, you know, sufficient capital growth on micro apartments to warrant an investment. I don't know. I'm not a fundi in that area, but an expert in that area. But one would think that given the number of investors who are putting their cash into these micro apartments, that there's expected growth. So yeah, it's interesting environment. I'm not going to get into the affordable sector in this conversation, because I think that's a conversation for another day. But
absolutely, absolutely.
Yeah.
No, great. Thanks for that input there, Brad. Thank you. So Nick, yeah, just maybe your comments on that. I mean, because we're also seeing money semigrate to the Western Cape. You know, we're not seeing people, they're staying in certain places and definitely attracting. And I mean, I know you have investments, you know, to satisfy this, but maybe just comments on Brad as well, and also Jonathan and the semigration of money.
Neil, it reminds me of a story an old wormy once said to me. He said he didn't live in the Western Cape. Where he was living, he said, "I want to stay here. I want to live here, but I want my money to live over there." And that was and that kind of is what we're seeing. So cheeky question, but just going on to I'll get onto some of Brad's points now, but going on to from an investment point of view, we are seeing a glut of people outside the Western Cape investing. And I suppose our offerings are also conducive to that, you know, because we are soft launching our new investment offering at the moment, which is a 14% per annum return to investors for capital investment over 2 years. And that's 14% per year, but the capital is guaranteed. And that's tied up with, it's asset backed with Cape-based property. So that'll, I think, appeal to the guys up in Gauteng immensely, because they've got immense security in the asset and the capital, as well as a good return. Going back to Brad, he mentioned the micro apartments. Sure, I don't know what the yields on those are, Brad. I couldn't tell you whether they're 10%, 8%, 6%, or 4% from a net yield point of view. My instinct tells me that the yields are quite low, because I can't imagine a micro apartment renting for much more than 9 or 10, which means you're 9 or 10,000 a month, maybe a bit more, 12, which still means your net yields would be quite low. And for me, if I can just piggyback on some of the earlier conversations, for me, with any investment properties that I or the group purchases, we focus on two things. One, it's got to have an okay yield, and there's got to be capital growth potential. But we certainly wouldn't enter into, if the micro apartments are yielding very poorly, we wouldn't hedge our bets on the capital growth on those. But that's just a personal opinion, because I actually don't know the stats for that. So yeah, so Neil, that's where we are. But yeah, I think people are. But just one more thing, sorry. I hope Brad doesn't give me a beating about this, because I'm going to mention his competitor. But just from Uber's point of view, so in the last 5 years, so what they've recognized is that all provinces have semigration to an extent, because it's fluid. People are always moving in and out of provinces. But what they found in the last 5 years is that the Cape is the only net positive semigration area. In other words, it's the only one that's increasing, and the inbound is up to 29% at the moment, which is up from 14%, which is 5 years ago. So that is a metric that they've got the empirical data for, and that what they're seeing on the ground is that semigration now accounts for 15% of all Western Cape transactions. So again, it's not an avalanche, but it's a decent chunk, which speaks to a trend.
Okay, no, I think that basically paints a good picture. I don't want to unpack the micro one now. I think it's for another day. But I've just got one comment on the majority of the people buying there's a lot of investors, and it's not people buying to live there. And in fact, a lot of people are renting it out to renters who can actually get the yields on the short-term rentals in Airbnb. It's a massive trend. It's called rent to rent, and so at the end of the day, the investor says, well, look, here we'll go undergo a certain level of rent with a property owner, and then they would rent it out. They would get the benefit of yield and put it on Airbnb, bookings.com, and that kind of thing. It's a massive, massive trend, not only in Sea Point, CBD of the Western Cape, but in other areas like Belleville. You'll be surprised. The old Boston Hotel being converted to a lot of its Airbnb and getting excellent return. But I think that's an Airbnb discussion, which we will have in our webinars, because we had a discussion about this last week. So Jonathan, you give me your thoughts just in terms of what Brad and Nick has said. Just add on to that. I see the time is starting to run out. Also, I'm going to ask our audience, if there's questions, please submit it now. So, Jonathan, just your comments on Brad and Nick and the market. Yeah.
I mean, we're in quite a fortunate position to see sort of quite a wide range of LSM buyers. So I mean, so like because of our property management business, we manage, for example, Conradi Park in Pinelands, which is the sort of a JV between Concord and the Western Cape government. So we, very low cost sort of tenants and first time homeowners, going all the way to sort of all the way to Gordons Bay, to like a Balwyn or part of Lake Precinct in Somerset West. So we see like a lot of different levels of apartments. I think going back to sort of the rental yields, not to go too much into sort of the micro apartments, but the worry for me with micro apartments is the capital appreciation, because they are small, they do have sort of quite high rental yields. But I think purchasers need to be very careful. When you hear of a rental yield that is really, really good for a specific amount of time from a developer, in 90% of the time, that's been worked into the purchase price, so you need to be careful of that. When they say you've got 12% rental yield guaranteed for 3 years. Yeah, sure. But that yield, whether they, obviously, the developer sort of has a guarantee, but it's probably in the purchase price there, so in year 4, when your yield goes to 8%, not saying that it will, but it's definitely something that you need to be careful of, because generally they've worked that great yield to get the sale into the purchase price. So it's not the real yield. And then when you take over the management of it, your yield goes from 12% to 8%, and you actually have, sort of like a more realistic rental yield. But, also like I find with people from Gauteng moving to Western Cape, there are a lot of affordable areas. If you have a look at your Gordons Bay, your Somerset West, your Kales River, your Milnerton, your sort of Blouberg sort of area, but more sort of Parklands, those areas, I found that our sort of Western Cape clients, even if you invite a person from Cape Town who stays in Hegovale over to Camps Bay, which for a Joburg person is a 5-minute drive, they're like, oh, I don't feel like driving all the way from Hegovale. It's like the most beautiful drive in the world. You sort of go, you sort of go up Kloof, you see a beautiful sea, and you go down. It takes you 5 minutes, but people in Gauteng are used to driving, So I mean, our offices are in Bryanston, in Gauteng, and I mean, we've got many people who live in Alberton and drive an hour every single morning and an hour back, and people that live in Centurion and Pretoria who drive in, So I don't think Gauteng purchasers are worried to sort of live in Gordons Bay and have a 50-minute drive in the morning to get into the Western Cape, or live in Kales River or Somerset West or Macassar, or, I mean, we manage developments in Paarl as well, sort of high end, and guys are quite happy to move to Paarl in a secure estate where it's beautiful and it's safe, and then take a drive into Cape Town CBD, that couldn't take them sort of an hour's drive, but they're driving from Pretoria to Johannesburg every single day anyway, and they've been commuting for years. So I mean, I do think that there are a lot of up and coming areas. There might be sort of a bit of a, not enough stock in the market, but the developers are moving out. They're moving out to these areas, and these areas compared to Gauteng are still safe. They're still beautiful compared to Gauteng. And they don't mind a bit of a drive, I mean, you're sort of close to the winelands and you have to do a bit of a commute to come into the CBD, you know, depending on where your head office is based. So yeah, yeah, you know, I still see a lot of growth in the outlying areas as well. And I think that would be, and also just going back, to to the Gauteng as well. Gauteng won't stay depressed forever. You know, I mean, there's still, the majority of the people are still there and their businesses are still there, and perhaps a good time to buy there as well, you know, because it's property prices are half what they once were, but they won't always be at that price, and there will be some capital appreciation as well, you know, so perhaps a good time to buy there as well, although I'm going to stick to renting for the time being.
Excellent. Great. Thanks very much, Jonathan. Okay, so gents, we've come to the end part of our webinar. So we've got 2 questions that I want to deal with, and then I'm going to ask you for your final wrap. I think it's been a very interesting discussion. I can see we've run out of time and we need to unpack this a little bit more, I think, and we probably must schedule this again. The whole big Semigration. It'd be nice to see post-elections where this is all going, or maybe to do 3 months down the line and measure and see what's actually happened, certainly from a Semigration perspective. We got 2 questions. The one is not 100%, it's from Rory Mills, and he said, can we ask the panel what their views are on life right developments for seniors market? I mean, I do understand, you know, life right's a very different type investment. So I don't know if any one of you want to have a go at that particular one in terms of life rights, and if any one of you are involved in that directly. Anybody want to have a go? Yep, Jonathan.
Yeah, so I'm not an expert on life rights, you know, but I can give you an example. We involved with Steyn City in Johannesburg. We managed Steyn City for the past 10 years. We also do, we also are mandated to do their off-plan sales and marketing of all of their stands, etc., etc. And City Centre, you know, which is sort of their, you know, the jewel of Steyn City. It's about 780 apartments, very high end and expensive for the Johannesburg market. It's sort of 60,000 Rand a square. They are launching a retirement village there, you know, with life rights. And I don't think it's a thing that you have to be worried about. You know, it's just, it's more of a way for the sort of overarching residents association to sort of keep quality control over those assets over a long period of time, rather than, it's a little bit like 100-year leasehold, you know, with the waterfall properties in Johannesburg. You know, it's it's a way that they can sort of make some money on the transfer of those properties, which then goes back into the association and keeps them at a specific level. But there's nothing to be worried about in terms of the traditional getting full title to it or not. It's, you know, it's really, my experience of it is, you know, it's just a way for the residents association to keep quality control over the development, you know, but you still can sell that property for a capital appreciation similar to having full title to it, you know. So I mean, without going into sort of like the nitty-gritty details of what life rights is, it's nothing to be worried about, you know. It's just another sort of way, it's just another way of property ownership, and in my experience, a way to safeguard the asset and the running of those assets for a long period of time.
Yeah, so absolutely. I think, Jonathan, one of the things we've actually run quite an in-depth discussion on life rights before. And I think one of the big advantages of life rights is the fact that you'll definitely get your money back. So whatever you put in, you'll get your money back. And normally you'd find the developer would take any sort of capital growth that's actually escalated on it. So, and life rights don't tend to be sort of, it's not really an investment, it's rather a lifestyle that you're investing to. So the investment's into the lifestyle. So if you want to get your money back, you can absolutely get your money back. Sometimes some developers add on a 25% a portion or whatever of the capital growth portion as well. That's from the experience that I've had. But I think certainly, you know, it's a senior living option. It's a very, very different type of investment. It is definitely an option. I know the Steyn City one exceptionally well. I know a lot of other developments and really top quality stuff. There's really a lot of good top quality senior living going up. Okay, next question is from Mark, and he says, where can I find stats metrics that are being discussed in the seminar? He says metrics such as Semigration, trends to provinces, percentage purchases, Western Cape residents, yields for micros, Airbnb. There's quite a lot. I mean, the first place to go to, Mark, is Lightstone. Lightstone is the best, certainly they do have a Semigration report. I know that, Brad, you've certainly got stats, because I know I think you got some, and Jonathan, I'm not sure you've got stats. And
Yeah, so
yeah,
so certainly, I mean, you could go to Loom as well. It's a similar service to that of Lightstone, and you can get all the stats on there. I think the questions, I mean, the number of stats that this individual is asking for is quite broad. So I think it's best to go onto one of those platforms and search for the stats that they're needing, rather than asking one of us for it.
No, absolutely. Yeah, look,
Yeah.
there's a lot. I mean, Airbnb, there's specific. Sorry, Jonathan, did you want to add in there?
Yeah, Neil, I was just saying, it's also important with stats. I mean, we discussed it on a previous call, but like you need to make sure the stats that you're looking at is comparing apples with apples. I mean, to get not knocking any strategist or stats, but John Lewis from FNB, I believe, he sort of gives, they've obviously got lots of stats to compare, and they're doing a lot of registrations and things like that, but to simply say the median house price in Cape Town is 1.2 million, that's a crazy stat, because it's I mean, you've got, as you said, you've got sort of yacht club facing sort of properties at 120,000 a square, and you've got a Conradi Park, which is sort of like low cost entry level, which is 14,000 a square. And how do you take a mean between those two? I mean, even a development that are over the road from each other, especially in South Africa, you've got sort of extremely wealthy and extremely poor neighborhoods right next to each other. So if you're having a look at stats, I just recommend that you are saying this is a similar development, similar square meterage, similar sort of amenities, and then compare those things, because it's just, you can't compare, a station house, Berman Brother development in the CBD at 68,000 Rand a square, and a Castle Rock development in Zonneblom at 25,000 a square. It's just a completely different thing. So you just have to make sure that what you're comparing is comparing apples with apples.
No, absolutely. Good. Guys, we've come to the end, believe it or not, to our webinar. But before we do so, I'm going to go around to each one of you just to give a 1-minute wrap, your final thoughts in terms of today's discussion. Leave somebody with a take home that they could use, starting with you, Brad.
I think, at a very high level, the Western Cape offers a lot of opportunity. I think, my fellow presenters today have mentioned many different aspects of the property market in the Western Cape, and I think it's really important. And I think Jonathan made a really valid point right now. You need to compare apples with apples, and the Western Cape is not Cape Town, number one, and the Western Cape is not the Atlantic seaboard, and it's certainly not the waterfront, where you're seeing prices of 130,000 Rand a square meter. And I think from someone living in Gauteng or KZN or anywhere outside of the Western Cape, it's really important to get detailed advice and as much as advice and information as you can, because this area is extremely vast, and it has many different areas, different price ranges and different products. It's not a one-horse scenario. So I think it's really important to do your homework and to get the right advice.
Wonderful. Thank you, Brad Bendel, CEO designate of Better Bond. And Nick, your final thoughts, your parting shots, please.
Neil, firstly, thanks for having me. It's been nice to hear the opinions of Brad and Jonathan. Just 3 quick things from me. First one is, I'll put the property sales hat on, or perspective, is my opinion. We didn't really talk about interest rates, but my opinion, as contrary as it might seem, is if you come into the Cape, etc., now is a good time to buy, because interest rates are high. the market's a bit dampened. Interest rates are going to come down at some stage, and the property prices, believe it or not, Brad spoke about the unhinging of property prices. It's only going to get, Cape Town property prices are only going to get higher when the interest rates start coming down. So now's a good time to buy. From an investment perspective, it's a very simple scenario. There's putting my investment point of view across is whatever you pursue, whatever you invest in, make sure your capital is protected, because that's sacrosanct. And then the last thing I want to say is make sure you go and vote.
Yes, reminder, don't forget about that, guys. There's no webinar next week because of the, can you believe it? We'll have to do it the weekend after, and we're going to do a post-election. That'll be, and that's coming up now for the next announcement. So thank you, CEO of Opportunity Private Capital, Managing Director, Co-founder, Nick Morgan. And finally, Jonathan, your parting shots, your final thoughts, takeaways for the audience, please.
Yeah, I think you need to make sure that you're putting the correct cap on when, if you are considering maybe semigrating to the Western Cape. I think you need to make sure that are you a homeowner moving to the Western Cape? Are you moving for lifestyle and a better work opportunities, or are you an investor that's just looking for a yield? Because I think those are two different things. And we actually have many people who have semigrated down to the Western Cape from Gauteng who have come back due to salaries not being exactly the same, opportunities not being as large. So I just think make sure that you're making the correct decision on why you're moving before you make the choice. Do your homework about areas and yields. But I certainly do think that at the moment in South Africa, in the South African landscape, I'd say the Western Cape has the best capital appreciation out of all of the provinces, and in my opinion, the best rental yields as well. So with that in mind, yeah, I'll leave it to the listeners, to make their decision on what to do.
Well, that comes from a Joburger himself. That's Jonathan Kohler. He's the CEO and founder of Lansdowne Property Group. Gentlemen, it's wonderful actually having you all here today. I think it was such an insightful discussion. Thank you for sharing all your insights on Semigration, and to our audience, we appreciate your active participation, engagement today, and we hope you've got valuable knowledge. More importantly, if you want to reach out to any one of our guests or panelists here today, please let us know. We'll make sure they will reach out to you. So just before we close, I just want to remind our audience of our next events. This weekend in Johannesburg, there's a 2-day workshop. I was just in Cape Town with Rich Dad, Poor Dad author Robert Kiyosaki. It's in Empress Palace on Saturday and Sunday this weekend. If you are interested, there should be a link below, or you can just go to the REI website and you can go and see him. I have interviewed him a number of times. Very interesting, and he's maybe got a lot of people into property for the very first time. And then our next webinar, yes, so maybe next week, as Nick said, don't forget to vote. I think it's very important. That's next Wednesday. It's definitely an election that could change the space, probably our most important election in the last 30 years. So we hope that you're all going to the polls. That's next Wednesday, and our next webinar will be the following Thursday. That's Thursday, the 6th of June at 12 o'clock. And the topic is on post-election outlook for the South African property market with esteemed economist Erwin Roeder. We've also got a developer and also a bank economist as well. You just click on the link below, or you just go to the REI under events on our website and you can get it there. So until our next event and our next webinar, this is Neil Peterson alongside with our guests Brad, Nick, and Jonathan, wishing you a wonderful week ahead, and may your ventures be fruitful and your properties thrive with absolute prosperity. Neil Peterson and the team signing out. Until next time. Goodbye, everybody.